Good morning, traders. It is 8:02 a.m. Chicago time on Friday. Happy Friday to everybody. The 19th of August, 2022. This is episode number 2297. 2297. Just 3 episodes away in addition to this one to get to the 2300 level. Again, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we do have a market that is in a mild risk-off posture. Markets are selling off a little bit this morning. We had discussed this for the last couple of days. The laggards today, the Russell, 2,000 down 106 basis points, 21 points, and the NASDAQ down 1.04% or 141 points. The S&P is off and is opening out of range, it looks like this morning, down 83 basis points, and the Dow also off and opening out of range, down 61 basis points. Crude follows in on the theme of being down $1.13, 1.27%. But what's interesting is the treasuries are getting hit this morning. The 10 years are down 39 basis points on the futures, not in yield. And the 30-year bond is down 113 basis points on the futures, not in yield. We're also seeing the same in the bund. So what is this all about? A couple things. There isn't all that much news flow here. However, the German PPI came in extremely hot today. German PPI for July came in at 5.3%. 5.3% versus 0.4% expected. So again, the German PPI came in 4.9% hotter in 1 month. In the month of July. That's extremely big. So the other piece is that there have been parabolic moves, if you have not noticed, in the natural gas prices. Let me pull up that chart. I meant to natural gas futures. What is going on here? No, yeah, Henry Hub. Here we go. Natural gas futures have been climbing like crazy, pushing pretty decent levels here. This is the NYMEX Natty Gas to Henry Hub prices. $9.75 set the other day. These things have been just ripping straight up. And this is putting a lot of strain on Europe, which is reliant very heavily on the natural gas coming out of Russia. So on top of that, the Wall Street Journal put out a big article yesterday. I started reading it, but didn't get very far, about how the market is betting against the Fed, that the Fed and the stock traders are at war, and there are big bets against the Fed getting interest rates wrong. So that's potentially putting pressure on yields here this morning, but we'll see. I don't know if it's a cop-out or not, but that's what we have. The big earnings today come from Deere. Deere missed its earnings by about 8% and beat big on the revenue, came in at $14.1 billion on revenue versus estimated 12.78, so more money in but less profit. Sounds like a cost issue. And then other than that, the calendar only has Fed's Barkin speaking right now at 0900 Eastern. Looking at the S&P is in a multi-distribution profile in a selling stream. It is the S&P, the entire volume of the S&P at price has occurred below the prior settlement. So the inventory is 100% short, pretty good range, 47 points. The point of control shifting to 42.50. If you recall, we talked yesterday, the day before that we are likely to roll over and go down to test that 42.50 area. And then well, let's see. Have you been paying attention? What was the target that I've been talking about for the last couple of days on the downside? Let's see if you've been listening. What has been the target on the downside for the S&P that we've been discussing for the last couple of days? In the meantime, let me pull up what I showed yesterday. 42.35 is the number. That's right. 42.35. And then deep beneath that is 41.50, but ultimately 41.20. Not 42.20, but 41.20. But hey, it's close enough. 42.35 or 42.20. What's 15 points between friends? So yesterday, this is what I posted. I said that it's very, very likely to spend a lot of time between these two areas, namely the 95 to 70 area. We're likely to consolidate in here. That was what the key plan was. I thought I showed it a little bit better, but let's see what I said. This is from yesterday's video. I don't know. I thought I showed a little bit better that it's likely to just chop around in there. There we go. There we go. Somewhere in here. There it is. 95 to 70. 95 to 70. Chop, 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 chop. Okay. So that's where that's what I was showing yesterday. No, my camera's not frozen. This is just from yesterday. I'm just pulling up yesterday's video, which you have access to. Here's what we've got. What we did yesterday. This is the actual. So the actual is we pushed to 95 yesterday on the high, and we put in a low at about 42.64, something like that. And we were completely balanced yesterday. We opened right in between these two prongs that I talked about, and we ended up balancing out, and we ended up tagging this composite point of control that compresses everything from the 11th of August all the way through to the 17th. So yesterday's action is completely in line, completely balanced, really not much to say other than it was an inside day to the prior day, pretty compressed, relatively compressed range, but the volume yesterday was not compressed. The volume the day before that, which had some 50 points of range, was 1.32. Yesterday's volume was 1.32 million as well, but in a much tighter range, in about 30 points of range. So a lot of compression. It's that pressing the gunpowder into the barrel pretty tight. So we are likely to then coil and break away from these areas. And as discussed yesterday, the break, or the last few days, the break is likely to be down into the 42.35 because we are confronting some key levels above the 4,300, including the 200 moving average, and forward-looking earnings being priced into the S&P. So this rotation is somewhat expected, as we have been discussing for the last couple of days. So this is what we've got. So the day before yesterday, we breached the low. We opened below it. We pushed in, and then we finished below. Yesterday, we opened in line, completely imbalanced, and then we tested down, up, down, up, down, up. We finished a little bit higher. We put in a settlement of what you see there, 42.8650. And then this morning, we're trading down here. So now we are below that low. So this triggers off one-time framing down. The one-time framing on the weekly is still up. The weekly one-time framing is still up. and we are starting to look at the daily shifting down. So we're opening in a gap below. So this is where I talked about the likelihood that these weak structures, these shaded areas, these single prints, are likely to be tested out. You can see the low of today's session was within a few ticks of the next single print, which is at 42.40. The overnight low at 42.41 missed it by 4 ticks or so. This is very likely to continue down and come back into the 42.35 area. If it does not hold the 42.35 area, 42.20 and 42.15 come into play next, then the century figure, and then of course the big magnet down below is 41.20 for balance. So we have pushed high enough, we found our sellers, and we're starting to rotate over. That's what the auction is saying. So this morning, pushes up are likely to be sold. Yesterday's value area is important. Yesterday's value high, low, and the point of control are going to be important, and they are expected to provide resistance. Not only the low, yesterday's low, but the value area low is expected to provide resistance. So I'm looking for areas to short back if it's responsive. If it opens and is responsive, then I'm expecting that it's likely to struggle and push back down, and that creates an opportunity to sell shorts into the response higher. Remember, the market is responsive when it moves back towards the most recent bounce. So since we're looking at the prior day, the market is responsive buying this morning. It is moving from below and it's responding to an imbalance, and it's likely to try to push into that balance. The market is initiative when it goes away from that balance, and you never want to fade initiative behavior. When the market's initiative, it is really indicating that there is a force behind the movement and it is likely to trend. We want to detect initiative moves as early as possible, and that's what that means. So this morning we're going to be watching for how does it respond at 42.65, 64. So 64.65 is the first area, and then we start to look for how does it respond in that 70 value low. Then we're looking at the point of control right up here at 79.80. However, if this 70 doesn't hold, if this 70 gets tested and does not hold, then the 80 is very likely to be tested. So if it gets into the 70 and it starts to get bid, or it holds there, makes a weak high and starts to shove its way through, then I'm no longer looking for the short until we get to value high, which is also the prior settlement. So I've got to state this clearly so as not to confuse you. Let's look at this again. So I'm going to zoom in here a little bit. This is where we are right now. That moving dashed line there is the live market. We're going to look for, if we open up and it is just really responsive this morning, we're going to look for a reaction at the 64. Does that mean I offer out the 64.65 and just hope for the best? No. It means we're looking for to push into the 64, and then we're looking for a struggle to hold on to those prices or to climb higher. So what we want to see is it's trying to print, but it's not making, it's aggressively lifting. The tape is blue, but the price is the same. Then we're looking to join for a short there, rotate back down through the open, and then start our way through the 42.50, the overnight low, and so on and so forth, right? The overnight high is at 42.88 quarter, something like that. So the overnight high is up here. So we're going to look for the overnight stat on a short at 64. 64. If 64 gets squished and it just holds, I'm still going to look to trade from a responsive side at 70, 71. I'm expecting 70, 71 to hold. If it does hold, then we have another great opportunity for a short then I'm looking to scale ahead of the 64 because I don't want to be in a short in a market inside of the prior range, and the prior range holds. So I want to scale out ahead of the 64. Gives me about 6 points of scale. Should cover my risk for the trade. See what happens at the 64, and if it happens to break the 64, then we're looking to scale the open, and then we're really aiming for the overnight stat, the overnight low at 42.41, and then the key target becomes 35. So the targets are 50, which closes a gap, not a gap, but a single prints. We're looking for 41, which closes the overnight low, gives us the overnight stat, and that's done. Okay. However, let me change the color, and I'm going to give you a different scenario. Jawohl, mein Herr. If it opens up and it goes to 70, consolidates, and then it squeezes above the 70, you want to stop getting short because now we have a gap to settle trade. What does that mean? That means that as it pushes into the prior day's range, I'm not threatened. Still short biased. But if it pushes through value and starts holding value, then it's very likely to go and grab that 81 from 70. Okay? And now we have a gap to settle trade, which means that the market is going to look to come back to unchanged on the session, which is at settlement, not at close. So in this situation, if it starts to pop higher and I'm seeing impulses up with weak pullbacks, then it becomes a long to 81. But really, the long target is this 88, this 86.50, right? So this 86.50 becomes the gap to settle trade. That's the fully responsive trade. And in that situation, it is likely to stall out and hold. And then what we would have is 3 days. It'll be yesterday, the day before, and then today of complete balance. Expect some big movement next week. Expect a short squeeze to really squeeze some people into next week. Okay, so that's the scenario where we become responsive and then we just continue to buy. Very, very possible in a gap down situation where the weekly time framing is higher and the market is trending up overall. The market does not give up prices on the bull side very easily. So those are the two key scenarios that might play out today. I know I'm going into a lot of detail here, but understand that we are stuck in this double prong area over here. So we are just beneath it. So as soon as we take out the 70, we make it over the hill, and it's a pretty quick slide into 80. Okay, so 71 is really the extreme of where we want to continue to think from the short side, and we don't want to keep thinking on the short side when the day is trending up. But if it starts to fall over and trend down, then we have some clear distant targets where the projected range is expected to be 50 to 55 points, 50 to 55 points. So from 70, we're looking for 20, right? We're looking for 20, 42.20, 42.15 on the sell side. On the buy side, looking for a projection of about 40 to 45 points into Friday. And if what that means is depending on where it puts in a low at the open, let's say 42.50, then I'm really looking for it to get into 42.90 or so, which puts us right past the prior settlement. Okay, I know that's a lot of detail. I might have lost some of you with all the terms. Don't get too caught up in the terms, but this is what the auction is. This is how trading with a strong hand comes from. We are looking for what the market will do. I'm not projecting my expectations on the market. I'm not saying it's got to go. It has to go back up or it has to drop. There is no has to, there is no must, there is no needs to. It's going to do what it needs to do, and it's the prices that are printing are a culmination or a combination of everybody's opinions and their money being put into the market. That opinion is expressed in terms of dollars in the market, and that's what's dictating the auction. And what we need to do is then have a plan, just like you saw. I'm laying out my plan for the S&P minis for this morning. Have a plan, and all I'm doing is I'm waiting to I'm watching to see what comes into view as the market is trading. If what comes into view is that the 64 is weak, boom, that becomes the area I'm going to look to get short. I'm going to look to target the open, the 50, the 41 overnight stat, and then if it pushes through the overnight stat and it holds, then I am looking for 35. And if it goes to 20, that's awesome, and that's why I scale out. I'm looking for runners. If it comes into 64, drops, but then the drop is pretty weak and it starts to attack that 64 again, I'm looking for the second line of defense at the 70, 71. And if that doesn't hold, then my bias is going to completely shift towards getting long into 81 and the gap to settle trade into 86.50 and the close at 88.50, giving us the full day's range. So thinking from that perspective makes us strong rather than this order flow scalping, like you don't know where you are on the map. Very expensive way to trade, in my opinion. And when things go wrong, it's really hard to determine where you went wrong. So to me, having this kind of structure and holistic overview of the battlefield, coming in and waiting for the parties to make their moves and then responding accordingly with a good R factor trade. If you don't know what R factors are, there was a webinar I did. Go to Convergent Trading's YouTube. There's a webinar I did called something about R factors. Look at that. Define a good R factor. And to me, that's a recipe for success, hopefully. There is no guarantee, but this is what I'm looking for. This is how it's been for me for the last, been trading for 22 years, and I became a structure trader in 2005, 2006, and I have not had to change or adapt or whatever. This is the auction. It's always an auction. It's always the same. That's my opinion. Take it or leave it. So hopefully you've gained something here today. Don't forget to hit the subscribe button to the channel. If you have not subscribed, don't forget to hit like on the video on YouTube. Hit the heart icon on Periscope or Twitter media or whatever, so that more people can find this content and more people can trade more reasonably, in my opinion. Good luck, and I'll catch you tomorrow, Monday, and have a great weekend, everybody. Cheers.